Hi and welcome to Ezeetrader Weekly Outlook. This is Kim speaking on Monday the 16th of July. So let's run through these markets and let's firstly look at the fundamentals that we've got coming up this week. We've already had retail sales etc. coming out from the US, so core retail sales was the important number, came in pretty flat actually. The overall figure came in at 0.5, but it's the core figure that is greater focus, to be fair. Side of that, Empire State Index where it came in slightly better, so a little bit more positive news from that perspective. So coming out for the rest of the week, we've got the monetary policy meeting minutes coming out for the Australian dollar at 2:30 tomorrow morning. We've got Carney speaking at 9 o'clock on Tuesday. Now that's due to testify along with the Deputy Governor John Cunliffe on the financial stability report. So we could get some volatility coming through from that event. Thereafter, the important event for tomorrow morning is the employment data, which is out, coming out on a Tuesday once again. It used to always be a Wednesday, but anyway, it's coming out on a Tuesday, so there we are. Average earnings, claimant count, and unemployment numbers. So it's the average earnings, it's key at the moment, particularly taking into account inflation, which comes the day after, unfortunately. Expected to come in at 2.6, which is ahead of earnings. So earnings comes in at 2.5. Well, once again, inflation is outrunning earnings, and it suggests a softening, and it may create a softening of the pound. Okay, so important figures there. Canadian data later on, manufacturing sales, not big movers really, these numbers, although could create volatility as ever with the Canadian dollar. 215, we've got the capacity utilization rate in industrial production. These really used to rock the markets at one stage, but you see the capacity is nowhere near the sort of numbers. If it got into the sort of low 90s, it would be much more significant. Here it's there's plenty of capacity at the moment, although it's still on an upward curve. Let's just have a look at what's been going on there. In fact, it has been coming out higher, and it's missed on the last couple of occasions, so possibly we'll watch that carefully at 2:15. Aside of that, little else. Until 3 p.m. we've got Fed Chair Powell testifying at the Senate Banking Committee at 3 p.m. So normally comes in two parts. He reads a prepared statement which is out. I believe the text version is made it's literally at the start. It used to be a bit earlier, and it has been known to come out 30 minutes early, so just need to watch out for any volatility beforehand. So it could come out a little bit early, but generally the document comes out and the price moves from the document and not what he's saying. But there you go. It can move later as well, of course, if he gets questions. Moving forward from there, then, inflation, important figure Wednesday. It's particularly the core data we'll be looking at, but the CPI data there, final CPI number for Europe as well. It's not quite such a biggie. I've got an extra note there. We'll just change actual release them up to about 16 days. Where is it? Latest release. No, I thought it might have had a note there, a little note, but didn't seem to be anything there. But anyway, it's 10 o'clock. Less volatility on a Wednesday. Building housing, not interested. Testifying again, he'll be reading the same document out, I believe, on Wednesday. Crude oil inventories later. Thursday, we've got the Aussie unemployment data, or employment data, whichever way you look at it, coming out at 2:30. Some volatility there, and retail sales in the UK. Again, it's a big day, a big week for the pound this week, with three very important figures coming out there. Not underestimating the public sector net borrowing at 9:30 on Friday may create some volatility. Well, there's the OPEC JMMMC. It's easy for me to say, meetings going on through on Friday as well, so it's a monthly figure, a monthly meeting now. G20 meetings are also there, so maybe some chatter before then. And we got the inflation data and core retail sales out Friday afternoon. So there's a bit of stuff coming out this week. And with the G20 meetings as well, we may see some reasonable volatility coming through from there. Okay, let's look at the technicals now. and I'm just going to give you just an overview of the sentiment from the COT analysis. So this is the commitment of traders report I'm taking the data from and just looking at the sentiment from there. So the euro sentiment wise, it's gone a bit bearish again from the pension insurers. The bigger funds, the hedge funds themselves are more bearish, so it just continues to get bearish by the hedge funds, and it's still relatively weak there. I was just looking at some different data here. This is the monthly, it's come down to the weekly here, same sort of picture. We ran in to some resistance last week. At the beginning it gave the tone for most of the week up until Friday, when we saw a bit of a rally coming through. It got a bit oversold. It's now, well, in that range, and I just wonder whether it will continue in this range. I may actually just move this trend line up a little bit. It sort of broke it but never closed below it so far. It's quite a key sort of level. If it comes back towards it, it may give us some support, maybe see some buying coming into that point. From a daily perspective, really choppy today. It did pretty much, it followed through a little bit through into the weekly 50, but just pitched through that a little bit, sitting around it at the moment. Maybe we'll see a shooting star end up here on the end of the day. We'll see how this matches, but I coloured this area in blue because I think it's a sort of the volatile area that we could see the euro sitting in for some time. If we do start seeing it sell below today's low, well, maybe we'll risk it will go back towards the more significant bodies there around about 115 67 sort of area, or even back down to retest those prior lows there into the monthly S1. So erring at the moment. If it can pitch through, one thing in terms of the positivity, although the sentiment's weak on it, if it can pitch through this this daily trend line I've drawn on here, it'll be on the weeklies, wherever, but if it can pitch through that, well, then it becomes a little bit more bullish, and maybe we could, again, we've got sort of the bodies, these previous candles for the previous high here from late part of last week, the previous week rather. It could run back towards that sort of zone, but or the monthly R1, but I am looking to sell mostly. The pound has come here. Sentiment is slightly less bearish from the bigger fund holders. The hedge funds, it's neutral and dropped. We've seen a dropping of longs, so the longs are just dropping off a little bit there. But as I say, the bigger funds slightly less bearish, so it's a bit more of a neutral-ish stance coming through overall. Let's just come out to look at the monthly picture first on this, and well, it's really still in that sort of expansive downward move really from last week. It's continued in that way. It's arguable where it will go from here at the moment. It does look weak. It's still closed below its weekly 8, and it's looking iffy. And here we are. We've got sort of today's bar now. We had the hammer the other way. It pitched through today. Couldn't really hang on to those gains, and once again it looks like we may end up with a bit of a weakish day, and we could see some follow through. Certainly the Brexit stuff not helping there. Okay, dollar yen, of course that may come into play this week as well, the Brexit meetings on the pound, so something to bear in mind if there's any meetings coming on. Okay, so I was asked a big picture on this. Where are we going? Well, it's running to its monthly 50 at the moment. That's an upward-facing monthly 50, I would say. And quite often, when something's a bit upward-facing, it's got more chance of getting through. So there is the potential it could run through. It's halted at the moment, but of course it's a monthly 50, so we could be sitting in this bar for quite some time, i.e. the rest of the month. And by which time it could have broken through. Now there's prior highs there sitting at around about 114.50, a next significant sort of point of resistance, but they've been tapped so much, maybe it will break through it if it gets there, although it doesn't mean to say on the first attempt it will break through. And then beyond that sort of area, we've got these other highs somewhere at the 116.80 to 118.80, so there's a bit of a range there which could become a next sort of target. So it really needs to try and push above this monthly 50 at the moment. Coming down the time frames, it's obviously a bullish candle. It's broken through the trend line that was sitting across there, the significant trend line that was coming across right the way back from the prior highs there. It's closed above that, so it remains bullish from that point of view. We do have this weekly 200 above, which is again rising 200. It's equated to that monthly pivot, of course, monthly moving average. So that may just stall things a little bit. The big money, the sentiment on this is neutralish to bearish, and the hedge funds themselves are neutral to, well, getting a little bit more long side, on which would suggest downside at some point. But at the moment it's all looking okay. There's no divergences from these prior highs on this weekly. It looks all okay for the upside. Maybe with a weekly pivot underneath us, we could see a bit more of a retracement towards that. It sort of put the reversal candle in yesterday, although it's pitched up a bit again today. But if it breaks down, maybe that will provide some support, maybe with the daily 8s as well. So there's possible points of buying in points. Aussie dollar. The Aussie sentiment is marginally less short, but it's it's still 87% short on the big money. But the hedge funds are starting to unwind their positions a little bit here. So it's again slightly less short at the moment, unwinding positions, but it's still pretty weak there. From a monthly perspective, well, it's big engulfing bar. It's still pushing south there. The momentum's still looking pretty much downward. Still negative across here. It ran through last week into managed to pull back to the weekly 8, and from a daily perspective at the moment, well, it's already through its weekly pivot, looking a bit glum at the moment. And we could just end up in this sort of whether this is an A, B and we'll see a C move, we'll see, or whether it's an A, B and we're seeing the C move push up. We'll just have to wait how this works its way out. So it's not particularly clear in what we're seeing. Overall though, the bigger trend with the lower highs, lower lows still would suggest the potential for further downside. Canadian dollar. So Canadian dollars last week pushed up. It's just come back to a monthly on that, just come out a bit further to see what's. Well, that's not really telling us too much at the moment. Did get the shooting star the last month there as it pulled away, but that was, I mean, sort of, we're well into this month already, and well, we saw a bit of a correction on a weekly basis, and it's chopping around. Last week saw it a more positive upside there. And at the moment, well, as I've said this before, we were looking originally at bounces off this pivot. It went through it. It gave the potential to bounce from the pivot swing that was sitting there. I was talking about that last week. It did go, but it came all the way back down there again on a bit of mixed news there, but pitched up. And at the moment, well, it's a bit in between. Now the sentiment on the Canadian dollar is neutral from the big boys, and the hedge funds, well, they're still more short. They're actually, which would see this pushing upwards, because it's, don't forget, it's dollar CAD. So they're looking really at the short side of things, and they're slightly more short. But I think that will come through as oil prices. If they continue to soften, well, this gives the CAD more chance to push up there. There is news this week. And finally, the New Zealand dollar. Now, this is getting into a bit of an extreme basis. In fact, if I've got the chart handy, let's just see if I can bring it in for you. I've not seen this like this for a long time, and it's made me review my New Zealand short. I'm in the short position and reviewing it now. What I'm going to just bring up is. Hopefully you can see this clear enough, and I'm bringing this right across so we see all history here. I'm just looking at the overall position here. This is of all positions, so this is the what's classed as the sell side generally, and the dealers are well, basically they have to cover the other side of the market, and we're at quite a extreme since this data has been recorded in this format. We're seeing we've pushed higher than we've seen before. Now it's partly because all the shorts on the New Zealand dollar are really sort of the combined shorts there have caused this just this black line, not the previous green line I'm looking at here, but they become particularly, as I say, it's become effectively at this point where we could see some reaction. So just wary of this movement at the moment. It's closed back outside its bands last week there, and well, it may continue its route. My targets are sort of looking towards the lows and the S1 now on the monthly basis. It may just continue in that route. It had a bit of a pitch up today. We could see some further downside as we go, but I'm just wary that when something gets to the point where everyone's sold, well, it gets to a point where there's no more sellers and the market can potentially, so it's a sort of a contrarian view of what we're seeing there. But for now it still looks bearish, bearish on these daily point of view, lower highs, lower lows coming through, but we're just in this sort of indecisive area maybe on the dailies a little bit. But if it can break through Friday's lows there and continue down, I'll be happy. But it may suggest that we've got a bit more downside. Now, of course, the sentiment change there, it may not react. We may not see a reaction immediately. It's just a case of watch out, because it seems that, well, as I say, you tend to get too extreme on one side of the market, and it's a point where we should be looking for reversals, but we haven't got a reversal at the moment, potentially, or at the moment. I'd rather see some divergence or something, maybe on a MACD sort of side of things. If it comes down to these prior lows into this S1 and we've got some divergence, great. That may give us the beginning of a signal, and then it's just waiting for getting a bit of a confirmation trigger. Okay, that's New Zealand dollar. I just wanted to look at the S&Ps because I get quite a lot of requests for some data and analysis. I'm looking at the futures. Futures last week kicked up again into a point of extreme. I say extreme, it's not actually extreme in it, but it pushed beyond the prior near-term highs there and looking reasonably good. From the sentiment point of view, the longs increased on the big boys. The longs increased, shorts reduced. So I mean, it's 61% long for the pensions, the insurers, etc. They're sitting in a much back into a sort of long world, so it's not overly long. The hedge funds, they may get squeezed on this. Their shorts increased to about 58% short, and they tend to get it wrong quite a lot on the S&Ps, as I said before. So we may just get a bit more of a short squeeze coming through there and squeeze those short positions out a little bit more. We have got earnings season starting. The bank started, I think it was on Friday, with, was it JP Morgan put out some reasonable data. So we have got earnings seasons kicking in, and maybe we'll see some more positive facts, which will potentially push the S&Ps further. Personally, whether it's got divergences on shorter time frames or not, I think it's a bit iffy to try and trade it. It has got divergence on these dailies, it would appear, and well, maybe we could get a push down to the weekly pivot, which is not far beyond, but at the moment it seems that any sort of retracement is probably short and sharp, and it's pitching back up. As I say, there is a bit of divergence across these dailies from the prior highs to this point here, but there's as I say, the sentiment is getting back bullish again. Okay, that's it for me. Not going to go further on anything else here for now. Or I may just look at oil. Actually, someone had a trade of the month or year for them so far this year, so I'll just bring in where is it? Oil Western Texas oil here, and it's looking like it may roll over some more. I'm just going to bring into the weekly picture there. There was some divergence, and a bit of double divergence really kicking through. It diverged for a long time, pushing up here though, from those prior highs, and that's why sometimes it's best waiting for a bit of a reversal. It did a reversal, never really made too much from it. It's done another weekly pivot swing, and well, it may have some more downside yet coming through there. So from the daily perspective, it's we'll see what happens. We've got the meeting later this week, and it may be that There's a lot of murmuring about oil prices being too high. Well, we'll see what happens from there. Okay, that's pretty much it for me. Have a great week, and I'll speak to you next week on the weekly updates, and of course every morning on a morning outlook. Bye for now.